Hey, so today we are going to have an overview for preparation for the final exam. What I will do is I will go through a few main points that you may want to make a note. You can focus on your study on that, then you should be okay with your final, okay? And yeah, so we'll start with that. I'm gonna share my screen. There we go. So we have our BF20 bookkeeping and financial accounting. Now for the final examination, we're gonna have 4 chapters to be covered, and chapter 7, 8, 9, and 11. We just went through chapter 11 yesterday, right? So it's gonna be super quick. I'll go through some main point. The first one I want you to pay attention is the chapter 11 we talked about yesterday. It's saying that payment by an employer, in addition to the wage and salaries they made to acquire employee benefits, right? So such as like group insurance coverage, we call those group insurance coverage as fringe benefits, right? Because I don't remember if I talked about this yesterday, but it is employee fringe benefits. So I want you to remember that. See asset test ratio. We have learned those ratios yesterday. Not yesterday, but was a long time ago. So the asset test ratio, also we call it a quick ratio. I wanted to understand how you're going to calculate that. Okay, so the asset test ratio or quick ratio is when you compare the short-term assets to its most short-term liabilities. Then when we have a calculation, we want to find it out if this company has enough cash to pay its short-term liabilities. So when you see those kind of questions, what do you need to do? There are a few different equations. First of all, you could simply use cash or cash equivalents from the balance sheets, right? Plus the current liabilities, or plus the current receivables or short-term investment. Those are supposed to all included into your current assets. What do you think you need to include in the inventory? Anyone? Do you think when you need to calculate the asset, like the quick ratio, you need to include in the inventory amount? No. Okay. So when you see the question, if you will give a balance sheet, then they ask you to calculate a current ratio. What you need to do is you're including your current assets divided by the current liabilities. But remember, the current assets is not including any inventories. Okay, you need to deduct the inventories. Okay, so be careful about that. Next point. There's some special journals from our chapter 7 or 8, like the cash receipts journals or cash payment journals. We're going to go through one question, I think, from chapter 8. So you will see exactly how those kind of questions will look like. That is actually the exercise you already did in your class. Okay, so before we move on to the real questions, another main point you need to remember is when you calculate the interest payable, we have learned from the liabilities, okay, for the notes payable. We have emphasized this like several times actually. When you have a principal amount, you have the rate. That rate is for annual rate. But for example, there is a $10,000, 10% 1 year note payable. Now they ask you, this has been purchased on July 31st. Now the question asks you, December 31st, how much is the interest payable? So July 31st till December 31st. How many days? So you need to calculate the days because the rate is for annual rate, right? So August, September, October, November, December, 5 months. The total is 153 days. Okay, so for 5 months, there are 153 days. When you need to calculate the interest payable, you use your principal, $11,000 or $10,000, times the 10%, times 153 days out of 365 days. So that will give you the interest payable amount. Okay, so be careful about the rate, be careful about the date. Because sometimes they ask you if the notes payable was issued on July 31st, the same time, and the balance sheets at December 31st, you need to do this. You'll still use the principal times the 10% times 5 out of 12, right? So that is for the month. All works. So be careful about interest calculation. Now, we're gonna see a few real questions. So one more time for your final exam, you will see probably around 30, probably 30 multiple choices. Those multiple choices basically covers all the definitions or basic, very simple, straightforward calculations. Okay, it's not like a very complicated one. So 30 questions will be the multiple choice, and then they're probably around 10 to 15 true or false. Okay, so that's be careful about that. Then after those 40 questions, you will have around 6 questions you need to do the journal entry or do the balance sheets or bank reconciliation, those kind of questions. So you either download the Word documents and just do whatever they told you and submit it through the email. Okay, after you finish all the multiple choice and true or false questions, and then submit that through email, or you can just post it at the bottom of the question. Okay, so one more time. We're gonna show you that final exam. That's right there. So I think I showed you before, but just quickly show one more time. So you could see these questions, question 21. They will show that you could click, see this is purchase journal or cash payment journals. When you click, there's a template shows up. So you can put your answers in there, or you can just simply type in there at the bottom. So when you finish typing, you go next page, go next page. When you finish the 26 questions, then you can just finish attempt and submit it. So I could get it from this button. I don't need to, you don't need to resubmit it through your email. Any questions so far? No, we're good. Okay, so I'm gonna go through a few questions then. Let's do the first question. It is from our chapter 7. There are some special journals we've been learned. Sales journal, purchase journal, cash receipts journal, cash disbursement journal, and general journal. You have to make sure that you understand which parts will go to the general journal, which ones will go to the sales journal or purchase journal. Okay, we'll go through a few examples so you will make it more clear. So I'm gonna go to here. This is from a textbook. I think you probably did this in your exercises. It's a problem 74B. Okay, so this question asks you, the sales company use the perpetual inventory system and makes all credit sale return 1% with 10 days or due in 30 days. We'll have the following transactions during the January. Companies record all sales returns and all purchase return in the general journal. So you'll see that if there's a return, if their credit memo happens, you need to go to a general journal. Now we'll see a couple of examples. See the first one, January the 2nd, issue the check, issue the invoice number 191 for sale on account to this Wu-Tang Design Limited, about $9,400. So what is the journal these transactions need to go? Anyone? Which journal? For January the 2nd. Sales, right? You could see the sales. So we sold our products to this wooden company. Then we issue our invoices for the sales. So we have to enter this into our sales journal. What is the subsidiary ledger? Because we sell stuff on account, which means we didn't receive the cash. So that will go to account receivable, right? That means you're gonna receive it in the future. So for January 2nd, issue invoices for sales on account, it will go to sales journal. Subsidiary ledger will be account receivable. Now the third, January 3rd, we purchased inventory on credit. Which journal this one gonna go? We purchased inventory. So this will go to purchase journal, right? It's the purchase journal. And then because we didn't pay cash, we have this credit terms, which means the subsidiary ledger will be affected is account payable. Okay, so this is account payable. Now, very similar for number 4, we sold inventory for cash. Now this is not on an account. We sold inventory for cash, which means we have cash received, right? So this is the cash receipts journal. We're gonna receive the cash. So it's cash receipt journal. The cash receipt, this transaction will affect any subsidiary ledger? No. Subsidiary ledger will be learned. Their most common one is account receivable ledgers and account payable. So this is not forming to either, right? So this is for cash. There's a cash receipt journal. Now, when you move on, for example, 17th. Let's see, January the 17th, we issue a credit memo for Franklin Limited for merchandise sent in arrows and returned to Butala by Franklin. What this transaction will enter in which journal? General journal. Right, so all the credit memo returns announces are goes to general journal. Now, what is the subsidiary ledger? Credit memo. So that will be account receivable, subsidiary ledger. Okay, so be careful. You will see those kind of questions in your exam. Okay, if you still get confused a little bit, try to do exercises. I think this is coming from your assignments on chapter 7. So those are actually the ones you need to remember. Now, I want to go, what is request for this one? Now, before you signed, you identified which transactions goes to which journal. I will just simply have examples. Let's see, January 17th. We issue a credit memo, okay, for $2,972 for the merchandise sent in arrows. How are you going to prepare the journal entry? All right, do you need to prepare a journal entry for sales return allowances? Yes, right. So if there's a sales return allowances, you need to put into your journal entry. You debit your sales return allowances, credit account receivable. Okay, because your account receivable decreased, because the credit memo will decrease your total returns. Okay, and also another you have to record it is the cost of goods sold. You need to record it cost of goods sold expenses. So you debit your inventory, credit your cost of goods sold. So that is basically from our chapter 7. Questions? Good? Okay, good. Now, the next one I wanted to show is still from our chapter 7. So we're going to get a few questions from chapter 7 actually. Quickly go. So chapter 7, What I want you to get familiar with is those special journal entries. You might see all those cash payment journals or purchase journals from your textbook. So make sure that if you see a business transaction, you'll know exactly which journal you need to enter in and which parts those numbers will need to enter in. Let's quickly see this cash payment journal. So cash payment journal, the examples we had before, like the paid account payable, right? So seeing that we purchased some inventories before and it cost us $1,200. Not from here, okay, this is different examples. See, we purchased some inventory on January 1st, and then on January the 2nd, we decided to pay off by cash with the check number. So when you see those kind of business transaction, you know that because it goes to a cash payment journal, you will see, you open a cash payment journal. Then you can put it into the date of this transaction happened, like January the 2nd, because that's the date you pay off. You have your check number, right? So whatever it shows in your question, it's probably going to be checking number 100 or checking number 200. So you put your check number right there. You have your payee. So that is where did you pay? You paid for a company A, you paid for company B, you put their company's name right there. You have your account debited. So what is this for? You could either say, for this examples, for November the 3rd from our slides, you will see the first payment goes to rent expenses, right? So that is the cash payments for the rent. That's why they put under account debits, like a detail is rent expenses. But if it didn't tell you what this amount for, you just simply put the company's name. So you can payee's name and account staff name are the same. So this is the account number. If you don't have it, don't worry about this. Post references, you don't need to worry about that because this is from your journal entry you have posted before. So no worries about that. And then because the rent expenses fall into 541 account number, so to put in there. But if you're during your exam, no worry about that, okay? So that's fine. Then because this amount is a cash payment, so we have your credit side under cash, $1,200, you put in there. Our debit is the account payable, but because it's specific for rent expenses, so we put it under other accounts. Now, for example, for the November 15th from this company, right, we made a payment. So by cash with a check number 103, then we put date, we put a check number, we put a payee and account debt. Then we move on. This is 700 deducted. So this is account payable is 700, and we paid how much cash? 679. Why is that? Because there is a discount, right? Yeah, so there's a discount must happen. As you will see that probably we paid out within the first 10 days. So we have a discount applied. So that's why you'll see we put account payable total amount under debit account payable, and then we put a total cash we've been paid, and 21 goes to credit as a discount. So that is how that works for cash payment journal. Take a look at this. If you are, it's in our textbook actually, so they showed you every detail. Make sure you understand, if you see a business transaction, you know where to put it in. So that's for cash payment journal. The next one, a special journal I want to show is the purchase journal. Now, so when you see the purchase journal is very similar to your cash payment, but it's different transaction, right? So the same example, see, this is the same company. So November 2nd, we purchased something from the JVG Canada. Now we put the supplier's account information. We have our invoice date. We should receive the invoice. So we put into the invoice date, the terms 3% within 15 days and due in 30 days. Now our credit will go account payable because our liability increased. So we put into account payable. And then the inventory parts under debit is inventory, right? So debit or inventory, credit or account payable. So that is how the purchase journal works. So when we move on to November the 9th, from the city office supply, we put the invoice date, the terms, and then we see that we actually purchased some equipment. So this is under other account because it's equipment. We put total amount was 440. Similar with debit this equipment and credit account payable 440 because our liability increased. So that's a purchase journal. So make sure you understand the purchase journal and cash payment journal, and you know where those numbers will go to. Okay, so that's for chapter 7. I think that's mostly will be covered in your final exam, the topics. Now we move on to our chapter 8. Okay, I'm gonna close this. I'm so confused. I have a lot of open. Now we're going to 8. That's a big part, right? I receive a lot of emails asking how to do a bank reconciliation. It's a really big part. But before we go to back, we're gonna go through a question. We're gonna go to exercises so everybody in the same page. Before we move on there, I think we also talk about a petty cash. So the petty cash part is in your chapter 8. Let's go 30, 39. So you will see that we need to know journal entries, right? When you took money from your petty cash account, the only time you need to record as a journal entry is you replenish your petty cash fund. So we'll quickly see examples. Now we see that assuming January 31st, a business create a petty cash funds 400. Very simple, very straightforward. At the very beginning, we debit petty cash account and then credit cash because we put money into this account. Right? Now during the month, January 31st to March the 31st, the petty cash account has been used. Now till end of the March 31st, we figure out the petty cash funds will still have 230 on hand. So our account, in our account, we still have $230. And 164 is the petty cash tickets. The total account for when we add all those up, so this is tickets has been used, which we took it for post office, maybe $5 or those very little money expenses. Then when we add those two up, you will see we only have $394, which means we're short of $6, right? Because our total amount should be 400. Now is 394 plus 6 shortage. Now we need to replenish, so we need to put the money back to make it $400 again. What are we gonna do for the journal entry? We had 230 on hand. We need to make it as a 400. So we need to put in back $170, right? So we need to put back $170 to make the balance as 400. Then the journal entry will be recorded. You credit your cash $170. Now you listed all the expenses from your tickets. That is how you used. You have your office supply 46, delivery expenses 34, you have selling expenses 84, then you have $6 shortage. So when you add all those up, your cash should equals to 170. Then with this 170, that is how you're gonna do your journal entry. Okay, so that is the petty cash journal entry. You need to know how to do it. Okay, that is one question for chapter 8. Now we need to go to the bank reconciliation. A lot of people have questions on that. So we're gonna do a real examples from our textbook. Before I move on to chapter 8, I don't want to mess up. Can you just write down quickly for chapter 9? You need to understand account receivable turnover. How are you going to do the ratio analysis for account receivable turnover? Okay. Then we move on to the cash. That's the ratio analysis. We move on to the bank reconciliation. Chapter 8. I'll just pull this slides out so every one of us could see how you're going to organize the bank reconciliation. Because all those accounts is just no change. See, when you see the bottom of this slice, each reconciling items is treated in exactly the same way in every situations. So that's why I have sent you guys a template for chapter 8, because they always start with a bank balance at the beginning of the year, and you always add in the deposit in transit. Correct bank error depends on the situation, so that's fine, but you always subtract the outstanding checks. Right? So that's how you're gonna organize as your bank's balance, and then you go to the book balance. So you always add EFT receipts or bank connections. It shows in a bank but not in the books, or interest revenues. Okay, subtract the service charge that is always being charged by the bank but not recorded in a book. Non-sufficient funds check is all being subtracted from the book. So we'll see real examples to explain this, because I want to make sure that you truly know how to do a reconciliation, and this is the steps I would do. Now the questions is in a problem 8-4A, the spinner bowling. So actually this is the question you see. I have received like 2 or 3 questions on how to do this. Now the questions is cash receipts and cash payments for the spinner bowling for November 2020. So make sure about the date, because always remember that you need to consider about the last bank reconciliation before you move on to create this current month's bank reconciliation, because the number outstanding will be affected the current bank reconciliation. Okay, so when you take a look at the cash receipts, that is actually deposit. This is the payment, so this is a withdrawal, right? Come out of the account. This is coming from the account. Now there are some information. The cash account of spinner shows a balance 26983 on November 30th. So that is the beginning balance we're going to put into our bank reconciliation. Outstanding amounts from the previous month's bank reconciliations. There is 1219 $500. This is outstanding from last month, and 1218 $400. And there's October 31st deposit in the transit $2,000. It didn't show from the last bank reconciliation. Now December the 3rd, spinner bowling received a bank statement like this. It always like this. What then explaining EFT, electronic funds transfer, non-sufficient funds, NSF. There are also some additional data for bank reconciliation is EFT deposit for the receipt of monthly rent. Non-sufficient funds check was received late in October from the customer. 1,430 bank connection of a notes receivable on November 30th included 100 interest revenue. So 1430 already included $100 interest rate. And then the correct amount of check number 1227 payment on account is 4968. But there's an error. Spinner bowling made a mistake on their books. They put 4468. So that's in lower. Right? We're gonna go through this. Now, so when you start doing a bank reconciliation, it's just really hard for me to do this. The much easier way you can print it out or have something on hand, so you have a check mark to match all those numbers exactly the same. So we could start at the very first steps. Now we need to take a look at previous bank reconciliations information. They said they're outstanding for 1219 for $500. We see if we can see the $500 shows in today's the current one. Now it shows actually, right? The 1219 $500 shows under withdrawal for November's. So we don't need to care about this amount. We do not need to enter it anymore. Now the check number 1218 for 400 is in there somewhere. 400? No. So we need to add this one in. The outstanding check number 1218 will still affect our current bank reconciliation. Then October 31st deposit in transit 2,000 is in the show in there? Yes. So the end of October's one shows in our November $2,000. So we do not need to care about this amount anymore. The only thing we need to include in current bank reconciliation is this $400, right? So now when you open this template, It's exactly the same. You could just make your own, okay? Feel comfortable to do whatever you want. So we have your company's name, you have a bank reconciliation, you have the date. Now we always start with the bank side. So first of all, always recording what's left from the last bank reconciliation. We just read the question, right? 1218 for 400 outstanding check. Now we put that one in before we forgot. So we put in there 1218 with $400. So always remember, this is the template, right? You always last the outstanding checks. So we put it in already. Now we move on to our bank statements. Now the real bank statements, the first of all, we take a look at our bank statements first. We match the number from our bank statement to the books. We see, now we're going to find it out what are not in our bank statements, but it recorded in our books. So we see the deposit first then. $2,000, right? It shows in there. So deposit first one, $2,000. We have check mark, match. Now, 880, it shows in our bank, but not showing in our books. We're gonna work on this in our books later. Now we have 3436, we have 3436, so we have check mark into our bank statement, check. We have 470, there's 470, so match, check mark. Now we have 1723, there's 1723, so match, check mark. Now we move on, there's 1665, 1065, check mark, match. 441, 441, 10875, 10875. There's a 2598. Is there 2598? No. So that means this is a deposit in transit, which means that we already made a deposit from our book site, but the bank hasn't received yet because this is November the 30th, right? So the very last day. So we have to record this deposit in transit to 2598. This is, so on the bank side, 2598. This is, how much is the balance from our bank? Sorry. No, this is the balance from the bank, 29915. Okay. So this is how you put into from the deposit side. Now we're down from the deposit side. Now we move on to the withdrawal side. The same situations. So we're going to check to see if all the numbers shows up in the bank statements, shows in our books. So this is 1221 1819. We have 1819. There's a 433 shows under bank statements, but not shows in the book. So we're gonna adjust our book. Okay, so we just make sure that 1819 matches 1819. There's 1144. 1144. There's 429. There's 429. And there's 111. 111. And then 816. There's 816. And there's 109. There's 109. 4468. 4468. Remember, this is a mistake. Okay, so we're going to adjust this mistake from our book side because the correct number is 4968. So we'll live in there. Now there's another check. That's from 1219 from the previous. So it's $500 and $25. Now, so we have until 1227. So the rest of the 998, 330, 2724 is not showing in our bank statements. So those are outstanding checks. Now you need to put it into your bank reconciliation. Right, so the three checks will be 1228, 1229, and there's one more, 1230. I'm not going to change any template. Okay, so just put in there. Now you have those outstanding checks, then you're down for the bank side. Right? You're already including your deposit amount. You deducted all those outstanding checks. Now, when you move on to the books, the very similar situations you need to do, we compare the numbers. Now, with book statements, balance sheets starts with 26983. So always the very beginning, put your balance beginning. 26983. Now, what you need to do, we see if there's a number missing. We move back to our book. Now, we remember from our deposit side, right? We have all those numbers shows under the bank deposit, but the bank balance, we have 433 didn't show because 433 is a non-sufficient funds check. Now, for non-sufficient funds check, you need to deduct it. Oh, we don't have this in there. I'll just put it quickly. Oh, right there. So we'll just put it into a non-sufficient fund check. Those are stable, right? Those are the template. Remember, when you see a non-sufficient fund check, you always put under books and subtracted area. So non-sufficient check, we have 433. What else is not shown? Under this part, we check mark, check mark, check mark, check mark. We have EFT insurance, a 275 EFT payments of insurance. That is withdrawal. So this is come out of your bank statements. So we need to deduct this 275 from your withdrawal account, right? So we just deduct this, what is that? EFT, a payment of insurance. So that is the total money we paid out. Now we need to add it in this total amount. What else in there shows? So this EFT insurance payout, we have 186. Service charge. Always remember the service charge because banks always charge the service charge, right? So we just put this service charge in back into your bank reconciliation. We have service charge $25. Now we're putting $25. And then now we move on to the ELT connections. Oh, for the deposit part, we have a EFT connection of the rent connection, $880. This one is not included in our cash receipts list, so we have to put it back into our bank reconciliation. So we have ELT with 880. Is there anything else we need to understand that we're missing from the deposit parts? I think I remember. Oh, right there. So there is a bank connection of a note receivable with $100 interest revenue. So 1430 is under bank connection of notes receivable. 1430, including the $100 interest, right? So now that basically everything has been covered, there's only one thing's not included in there. What is that? It's the arrow, right? So we need to make the arrow correction. Are you going to put in this amount, add into your book, or deduct your book? So be careful. The book arrow is the only, or the bank arrows is the only numbers that you need to consider situation. We see this is a deduction, right? So this is a check. We need to pay this amount. We need to pay this amount. The real amount we need to pay is 4968. But from our book side, what we recorded, we only record 4,468, which means that we have to pay $500 more. So we paid less than what they asked for. So from our book side, we need to deduct $500 more, right? Because we didn't pay enough. So that will be a book arrow. So that is how you work for your bank reconciliation, step by step. Any question so far? No? Okay, so be careful about the steps. I quickly show you the steps. Now we already finished the question together. It should be much easier for you to understand the steps. So the first step, always identify the closing balance from bank statements and the cash account. So that is the balance you need to put into your bank reconciliation, right? I was wrong because I didn't do it at the very beginning, step one. So always check the balance first. And then you review the bank reconciliation from the prior month that we did together, right? You make sure that those outstanding items from the last bank reconciliation still outstanding in the current bank reconciliation. So that's why you need to take a look at the previous one. Then when you compare the bank statements and book detail, cross out all items that can be matched, right? So if you have your pen handy or you have your real book, you can just have a check mark at the back. Then you know that which accounts has been cleared out. So you only need to worry about those not match, the numbers not match. Now need to adjust the bank side, left items on the book, cash account, or bank arrows. So finish the bank side first, then you move on to the book side, and then after all, they will ask you to make a journal entries for all the reconciling items. I'm not asking you to do that, so make sure that you understand how to do a bank reconciliation. That should be enough. Okay. So that's for chapter 9. Any question for chapter 9? No? Good. Okay, perfect. So I'm going to close it. Now, so chapter 9 is ready. Then we move on to chapter 8 is ready. So we'll move on to chapter 9. What's this? Oh, that's for my next course. Chapter 9. Chapter 9 talks about account binding, right? So account binding. This is account receivable turnover. Remember, I told you to remember how to calculate it. So make sure you understand how to make the calculation for account receivable turnover. Now, the question or the examples I want to show you is from 917. This method, the aging of accounts receivable method. So you will see that from the table, you will see each of the company's name, your client's name. And this is the account receivable amount by the days. So you have 1 to 30 days was $20,000. Which is the estimated allowance for doubtful accounts. So 1% out of 20%, $20,000 would not be connected, right? So you added up of all those clients' account receivable and then times 1. So give you $600 as allowance for doubtful accounts. Now following the same procedures, you see the Red Deer Pipe Corporation, 31 to 60 days. Owes you $3,000. Now you need to add it up. 3,000 plus the 2,000. This is $5,000 under 31 to 60 days. This is 2% of this $5,000 will not be connectable. So that would be a 100. When you finish all those for each client, you have your total allowance was $10,100. So this is the total allowance for doubtful account. Right, so that is the target. Now you need to make sure if you have a balance beginning of this doubtful account. So this is how this question shows you. At the very beginning of the year, the company has a beginning balance of $1,000. And then you need to achieve that $10,100. Then you have the calculation, what adjustment you need to do. You need to add it in $9,100 more. Right, so that is how the aging of accounts receivable method told you. You know, you calculate your target amount. You know your beginning balance of the account. Then you need to figure out how much exactly you need to put into the allowance for this year. The journal entries for to making this allowance for doubtful accounting debit for bad debit expenses, credit allowance for doubtful accounts. Okay, so remember, make sure that you know how to do this. You know how to make the calculation for the target of your doubtful accounts and do the adjustment. What is the total adjustment you need to do? And this number will go to your journal entry. So that is the questions you need to understand. So that is for chapter 9. Not too much in chapter 9 actually. And then we'll move on to our chapter 11, which we have studied yesterday. Okay, any question for chapter 9? Any question regarding this aging accounts receivable method? No? Okay, then the last part will be our 11. Chapter 11, payroll. I think payroll is pretty straightforward. It's just basically on a journal entry. So you know that you need to make like 2 or 3 journal entries. We're gonna go through the journal entries. Then you should be fine. The only problems you may have is to make the calculation of the CPP calculation. Don't worry about the rate. The EI CPP or income tax rate will give to you during the exam. So you just follow the rate, whatever they give to you to make the calculation. Now, before we move on to these examples, I wanted to ask you, how are you going to calculate CPP payment? CPP payment is kind of different, okay? Because CPP payment has exemption. Everyone in Canada has a CPP exemption. This exemption can be $3,000, can be $3,500. Because it's changed, I think it's $3,500 currently. But so make sure that your question will ask you, they told you that each employee will has a monthly income. Then they told you each one has a annual exemption for CPP. So when you need to calculate the CPP payment, you need to use this annual exemption divide by 12 months. So you will receive the monthly exemption. Then use the monthly salary, deduct the monthly exemption times the CPP rate. So that is how you're going to calculate your CPP payment. Okay, be careful because it's very easy to make mistakes on that. And that is the only tricky part when you do the payroll entries. Okay, use your CPP exemption divide by 12. So you have your monthly CPP exemption. Use your salary per month, deduct the monthly exemption times the CPP rate. Normal is 9.46 or 9.95, 4.95. So times the rate will give to you during the exam. Then that is how this CPP amount shows in there. Okay, so that's the example. That's gonna be our last question. So accrual for the weekly payroll for December 31st is $13,654. Take-home pay is $10,002.28. So that is the net pay. We already know that. Now there are 3 entries are required. First, we need to record the accrued payroll for net wage, salary, and bonus. We need to record the employer side of EI and CPP, and then we need to record the payment. Okay, so the journal entry will look like this. The first one, there is the office salary expenses and sales salary. So there's 2 different kind of salary. Okay, but normally if there's only one salary, that is totally fine. So you just put like a sales salary expenses or just the office salary expenses. Now when you put the total salaries in there, they should give to you this number. They're not going to ask you to calculate it. So they give you the total number of the salary per month. Then you need to calculate the income tax payable, CPP payable, EI payable. If there is a charitable donation payable, then you just need to put in there. And then this is the net pay. Okay, so this is the net pay accrued payroll payment payable. So that is how you record the payroll expenses for the pay period end of December 31st or monthly payment. Now the second journal you need to make it is how much EI and CPP has to be paid by the employer. We know that the CPP stayed the same, how much been paid by the employee, employer just matches. And then for EI, employer pays 1.4 times the employee's amount. Okay, so you debit employee benefits expenses and credit CPP and EI payable. Now the third entry, straightforward, cash paid net and salary payable. So we debit salary payable, credit cash. So that is basically everything you need to know for your final exam. If you are focused on your study on those topics we just talked about today, then you will have no problem to do your final examination. Now, before I let you go, any question? No? Good? Perfect? Totally understanding? Good. Okay, so I think that is everything we need to cover for today. Okay? Let me know if you find out any other questions. Send me an email. You still got time. So your due date will be on Friday. Yeah, any question?
But we have until Sunday night at midnight, right?
You do? I cannot see from my side though. What it shows on my is just give me 1 day or whatever. Oh, I didn't see anything. Are you normally have till like weekends to finish everything?
Yeah, usually every course goes till Sunday night if everything has to be submitted by Sunday night at midnight, and then it's after that, you're game over.
Oh, I see. Okay. Okay. I thought it's just for Friday only. Okay, then that's good. That sounds good. So still got 4 more days to study, right? If you need. Yeah.
Thank you.
Thank you. Enjoy your study. Let me know if you have any questions. Okay. Bye.
Bye now. Thank you.
Bye.
Thank you. Bye.
Stop.